Yo, so if y'all are in my Discord or you check the community tab on this channel, and you probably knew that this video was coming. So if you're new to the channel, I've been doing some finance content for a little bit now. I kind of switched over my channel niche from vlogging to finance content, and then I'm gonna go back to vlogging. If you haven't watched any of my previous videos, then you probably wouldn't know, but I do take day trading kind of serious a little bit. I wouldn't consider it my primary source of income, but it definitely pays for a lot of stuff, and it also funds my long-term investment, which is what we're gonna be talking about in this video. So today we're gonna go through the basics of investing. I'm gonna give you guys a step-by-step tutorial on how to build your money and set it up for the future, and I'm going to be giving some of my favorite growth stocks that have worked for me. I've actively been investing in trading since I was like 12 years old or so, and I recently got my account switched over to just my name when I turned 18, so I can let you guys know how my money has worked in the market and what I expect it to do in the future. Obviously, the stocks that I give are not financial advice, but it is what has worked for me and what I am currently investing into, and I'm not partnered with any of the brokers that I mentioned in this video. All of this is purely recommendation and educational. But before we start, I believe we're coming up on 4,000 subscribers, which is insane. So if this video helps you in any way, make sure to drop a like and subscribe. And a lot of people were wondering where I was Sunday. I was streaming with my guy Evan, who also day trades on Elden Ring. So if you guys are interested in the gaming channel, it is also in the description alongside my Twitch. And I want to start doing a watch of the day because a lot of people were interested in my watch collection. Today's watch of the day is the Franck Muir. This is the Life's a Gamble with the white face and the metal bracelet. So yeah, that's the watch of the day, but without wasting any more time, let's get straight into it. All right, so before we start, you need to understand the difference between saving, investing, and trading. The first one people understand, the second two people get mixed up. So the idea of saving is essentially parking your money in one place, typically some sort of institution where you will earn interest on the money that you have with them. Ideally, you'll be looking for the places with the highest interest rates so that way you can get the most money returned on your savings. But this isn't necessarily the best way to park your money, especially with current inflation rates. I'm not sure if savings interests are paying enough to keep up. However, you are ensuring that your capital stays at one spot in one place and you'll always know what it is. And it is the surefire way to ensure that your money stays parked in one place without sustaining any losses. Now, this differs from trading, which is what people confuse with investing. Trading is when you exchange shares of a stock back and forth, and it's typically executed over a short period of time. Now, trading does give fast returns, but it can result in an equal amount of losses. I would say if you don't have a full grasp on the market, to stay away from trading until you study up on it. And the best place to park your money for long-term wealth will be investing, which is just trading shares, but on a way longer scale. And this ultimately provides the best mix between trading and saving because you are parking your money in a portfolio, but the idea is to be putting money into places that are going to return at higher rates than saving over a long period of time. Now, there's also a few baseline things that you're gonna have to know about the stock market before you start. The first thing is understanding what a share is. A share is a very, very small percentage of a company or a fund that you own after purchasing. So if I buy 10 shares of Apple, I'm purchasing a very, very tiny percentage of Apple at whatever the share price is. If Apple's share price goes up, then my shares also go up and I make money. And vice versa, if it goes down, then obviously I'd lose money. Now, there are a ton of things that can affect the market at a specific time. Historically, it's been known to recover, but there are things that will make it drop a little bit. So economically, things like inflation, GDP, earnings reports for a company or revenue for the company. But politics also play a part because election time, things tend to get a little shaky, and news about the company can also affect the direction that the price is going. At the base level though, for the share price alone, the market is simply affected by buyers and sellers. So typically, if you have a mass amount of buyers on a single ticker, that'll cause the price to rise up. But if everybody dumps their money out of those shares, then that price will go down. Now, you're gonna need three things when you're trying to start investing, and those three things will be your initial investment, which can be as little as $100, it can be $50, it could even be $10 if you wanted to, now that brokers are offering fractional shares. The second thing that you're gonna need is a broker. The broker is the firm that's gonna be handling your account. I would choose this wisely because certain brokers will offer more perks and features than others. So for example, you might want to use something like E-Trade, Webull, or something like Robinhood. Those three are like some of the most popular for long-term investing under your own means. You could also hire somebody from an investment firm to host all of your funds, but I personally don't do this. And the last thing you're gonna need is an investment plan. So your plan should include a list of tickers that you're interested in putting money into, and you should also plan out how much and how frequently you plan to deposit into your account. By having an investment plan and sticking to it, you'll be able to guesstimate how much you'll have in the future, assuming that your account follows the growth plan that you've set out. So an example of like a basic investment plan that someone might follow is going to be something like taking $500 every month and then putting it into their broker, and that $500 that they put in every month, they'll split up between a list of stocks, which is what we're about to talk about now. So the method of investment I'm targeting in this video specifically is stocks. There are many different kinds of stocks and tickers that you can get into. I'm gonna break up my favorite in this video though. Now ideally you want your portfolio to be diversified, so you shouldn't have all of your money within one single ticker or one single avenue of investment. You really should be allocating into the best methods that work for you, but obviously not every single dollar that you have should be in one place. So the most common and what seems to be the most consistent type of stock is an ETF. An ETF is an exchange traded fund, and they are pretty much just collections of different stocks put into one single ticker. And by looking up that ticker, you can actually find the exact stocks that are found within that ETF, and that'll also allow you to find out the average return annually on that specific ticker. So for example, VOO, which is VOO, this is a Vanguard ETF that hosts a lot of tech stocks. So VOO has assets from Microsoft, Apple, Nvidia, which is massive right now, we'll get into them later, Amazon, Google, Meta, and the list pretty much goes on and on. By searching this ticker, you can also find the return averages. So already this year, VOO has turned around 13%, and that's year to date, so starting from January 1st. In the past calendar year, they're already up 27%. That means if I put $10,000 into VOO a year ago, I would already be up $2,700 passively. Arguably the most known ETF, which is SPY, and that's the ticker SPY. They've also had a 13% return year to date, and overall in the past calendar year, they've had about a 27% return. Now there are sectors of the market, which also means that there are sectors of ETFs. Some of them are broad, some of them are industry specific, like into tech or crude oil, technically energy. And basically your goal is to research which ETF you're interested in. So me in particular, I like to go into tech stocks and tech ETFs. That's where I park a lot of my money. So you should be researching the average yearly return, and you can use a compound interest calculator to add up how much you'll have over the span of, let's say, 20 years. Now the S&P 500 SPY specifically has about a 10 or 11% yearly return. So assuming that I put $5,000 in and I contribute $1,000 a month to my investment, in 5 years I will have about $86,000. And that's only 5 years. Imagine doing that for 30. If I were to keep the same investment plan at $1,000 every single month, the principal amount would be $365,000, but my total balance would be $2,359,674. And considering that you're doing this over the course of multiple years, this will grow exponentially, and that is the appeal to investment. So here's a couple ETFs that you can start and look into. Like I said, none of this is financial advice. This is more so for you to research and its educational purposes. You can look into SPY, which is the broad market ETF that I listed before, or you can look into VTI, which is Vanguard's total market ETF. SPY and VTI are very large cap and target a very broad amount of the market. So if you don't want to stick to one specific area, those two are pretty much the best to go with. If you want to go sector specific into technology, you could try XLK. For energy, you could try XLE. Obviously, these aren't the only ETFs in those sectors, but they're pretty much the ones that I go with. There is a market for metals like gold and silver, and their tickers are GLD and SLV, but you could also try a small market cap ETF, which is IWM. You want to identify what sectors you want to target and then add them to your portfolio. So for me, I know that technology is a massive part of this planet, so I consistently put money into tech ETFs. But like I said, if you want to stay broad, you can go with something like the S&P or VTI. Now, ETFs aren't the only way you can invest. You can also go into specific stocks and shares of multiple companies. Since you're moving out of an ETF and into a specific company, the gains are going to be a bit different from something that's already established. While the S&P averages about 10%, you may jump into a company that has really good news or just a good performance year and they go up 20 or 30%. So for example, Apple in the past 48 hours has gone from $180 a share to $220, which is about a 22% gain, which is 12% over your average ETF gains for the year. You can also have a company like Nvidia who recently split their stock. They did a 10-to-1 ratio, which brought their share price down to about 117, but they're already back up to almost $127. That's about 8.5% returns in a week. So obviously, like I said, the performance of an individualized company may bring you higher returns than an ETF, but it also brings higher risk. Now, as you start to build your portfolio, building up more shares, you're gonna have to actually manage it effectively. And this is gonna be completely separate from sticking to your investment plan. You wanna be making sure that your investments are doing what you want them to do. Otherwise, you're gonna have to reallocate and potentially change up your investment plan. So as far as management, you're gonna wanna be setting goals for what you wanna reach. And this includes both short-term and long-term amounts. You're also gonna have to set up risk management. The general rule of thumb is don't put in what you're not willing to lose. And you should be able to withstand some losses to your portfolio without jeopardizing your financial status. This goes without saying, but you should be checking your portfolio. If one of your investments isn't keeping up with the growth marks that you have set, then you may have to reallocate. You should also be staying informed on topics that are related to what you're invested in. So for example, like I said before, a lot of my stocks are tech related. I lean very heavily into earnings reports and any news that comes out related to a company. This will also help you identify good points to get in. So for example, with Nvidia's recent stock split, I was able to catch a whole bunch of shares at a very low price. And even if it drops in the short term, I am bullish on the company in the long term, and I believe that they're going to keep going up. The goal is to be continuously learning about what's in your portfolio, and every decision you make to buy or sell to allocate to your portfolio needs to be educated. This goes along with your trading plan, but consistency is a part of management. If you know that your long-term goal requires you to be putting in $1,000 every single month and you fail to do so, obviously you cannot expect the same growth. And all of this is management, so that way you can keep your capital as high as possible and reduce losses as much as possible. And lastly is just patience. You have to understand that this is not trading, so you are in this for the long term. You're not going to get those 99-100% returns within a month of entering an investment. You're expecting to get those returns over a long period of time. Now, this was the shortest way I could compile all this information, but if you want me to go in depth with many trading strategies that I've used and investing strategies that I use personally, just drop a comment and I'll get to it. I've been doing a lot of these finance videos, and I think tomorrow I'm gonna do another one on TikTok Shop. So if you think that'll interest you, make sure to subscribe and tune in tomorrow. But like I said, if there's anything that I didn't touch that you want me to touch on in part 2, let me know in the comments. And yeah, it's 10:35. I will see you guys in the next video tomorrow or 2 days from now. Bye-bye.